All right, guys, we're going to get going right now. I'm just going to pop up the recording software, and we're going to go. That's a SPY chart. Okay, active percenter. This. There you go. Make sure I'm on the right screen, because that one time I recorded the wrong screen like an idiot. I can't believe I did that. All righty. I'm just going to trickle this here. All right, guys, we're going to get going right now. I'm just going to hit the record, and then I'm going to dive right in. Where the heck are you? Your record thing. There you are. Hey everybody, welcome to the Spartan 101. Today is April 17, 2020. We're going to be talking about intraday trading, equity, and options. We're going to be talking about basically going through setups, scanning, basically thought process. We're going to also be going through the mindset that I have intraday because it's much different than in the morning, obviously because of the speed change. We're going to be talking about options trading in the afternoon and what I look for specifically. In regards to that, we'll talk about conviction, etc. So it should be a, we should have a lot of stuff to go through today. In regards to this webinar, guys, I know there's a bunch of new people in here today, and a couple different things. If you guys are new to the webinars and you have not watched any of the recordings, and you're watching this recording right now, you have to go back and watch one of the first recordings I've done. So if you scroll to the beginning of all the webinars, if you watch one of those, I go through my technical system, I go through the time frames I use, the EMAs I use, how these things work together. It's imperative to understand how those things work before diving into any of the other webinars. Once you get a handle on the technicals and the risk reward, then go through the webinars in any single order. If you want an order, there is one posted in the education Discord chat. I'm going to actually post you the link right now, guys, for the guys that are new. So there's the education Discord chat. The order's posted in there. You can take a look at it. What order I recommend you watch the webinars. New thing as well is my admin is creating a table of contents for all the webinars because there's so many now that it's kind of hard to navigate through them all. So this is going to make it a lot easier to understand where to be looking, blah, 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 blah. So you can look forward to that. So just to get a good sense of who's new, guys, who's new in the webinars today? Have you guys watched any of the recordings? You can just write in the Zoom chat. By the way, this is where we talk Zoom chat. We don't talk in Discord. This is the only time it's different from Discord. You not seen them yet? Plan to? So anyone that you watched 5 this week, good, awesome. Not yet, joined last night. Okay, Nina. So for the people that are new, just like I said, there's going to be some stuff on the technical side. When I go through the technicals, I'll try to briefly explain it. But if you want a really much more in-depth explanation of the system, watch the old webinars. You'll get a good sense of how everything works, and then you'll understand more of what I'm actually talking about. And the reason why I can't go through it today is just because there's not enough time. So through the quarter way through. Okay, good, awesome. So a couple of you guys have seen some stuff. That's great. All right, guys. Like I said, today we're going to be talking about intraday trading, equity, and options. So let's just dive right into it. So we'll go through some examples, etc. Intraday trading. So last week we talked about trading in the morning. This week, obviously, it made sense to progress into the intraday trading. So in terms of the mindset, it's different, obviously, right? How is the mindset different, do you guys think? In the morning, let's just talk about the morning mindset. Morning mindset, obviously, fast-paced, quick decision-making, risk reward has to be in check. You have to have things planned out. We flip to the afternoon. Let's talk about that mindset. So what do you guys think? Need to find direction in the morning. How about in the afternoon, though? How do we think differently? How should we think differently? Slower? Okay, yeah. So afternoon, guys. We're talking about afternoon right now. Slower, yeah. What comes with a slower pace? Patience? What else? Trend VWAP, don't use the VWAP, but you'll see that if you watch the other webinars. Trend, yeah. How does setups differ from the morning, guys? There's one thing that no one said yet. Volume. Okay. Confirmation. There it is. So one key thing, and the biggest thing I'd say intraday, is confirmation. You get setups that happen all the time, but because things move slower, you need confirmation on breakouts. That's one of the biggest things. That has to do with patience. That has to do with, making sure the setup is correct from a risk reward perspective. And then basically just looking to wait, scale in, take a piece, confirms, add into the position. I would say most of intraday trading is kind of built around that confirmation aspect. In the morning, confirmation is really quick. So because confirmation is really quick in the morning, obviously you don't need to wait for candles to close out other stuff. Afternoon, you do have to. The nice thing about trading in the afternoon as well, because it's slower, we have, because we get a lot, we got to be patient on stuff. We got a lot more time to make decisions, which means we have a lot more time to set up risk reward. We have a lot more time to scan for setups, a lot more time to basically weed out bad things and look for the best of things. Look for those A+ setups. If you were in the live chat today, especially, we were waiting almost the entire day. And I said, stay small. There's nothing going on. Market's consolidating. We'll know when it's time. There will be trades that present themselves at the end of the day. Waited the entire day. And then, the last 30 minutes, 20 minutes today is when we got the actual movement in the market. So you've got to be able to recognize that type of pattern, especially when we're trading options, because if you get into an options trade and it's flat or not moving, then obviously the, sorry, I just lost my train of thought there. I don't know what I was saying. Anyway, I'm just going to move on. So anyways, different mindset in the morning. Biggest thing, like I said, is just it's built around confirmation, built around slower setups. A+ setups. You can wait for those setups to occur. That's one of the biggest things. It's hard to be patient intraday, but you have to be patient for those setups to occur, because we don't want to, basically chip away at our profits from the morning by taking setups that are, basically trading flat or doesn't really make sense to risk reward, etc. So good thing, more time to make decisions, set up slower mindset. Confirmation's key. Like I said, entries, one of the biggest things, especially on the option side. If you miss the move, not a big deal, move on. There's always another trade. Yeah, oh, that's right. I was just saying, when options, if you get into an option and it's not like the stock that you're trading off of is trading flat or not really doing anything, there's going to be decay on those contracts. Usually not a ton if it's earlier in the week, but as you get closer to Friday, you get more and more decay. So we want to make sure that we're taking something that has a confirmed breakout to the upside or the downside, so that we obviously don't get stuck with that decay. The nice thing is intraday, it is slower, so we can scale into those positions. So it's not the end of the world if we have a starter size and there's a little bit of decay, but that's just something to keep in mind. Intraday, no forcing trades, obviously. We don't want to be one of the things, and this is something I'm sure that every single trader has gone through. Let me just hide all drawings on this shop here. Now let's look at an example. So if you look at something like, let's say that you were trying to trade SPR intraday and you're forcing the trade. Forcing the trade would be going like long, short in a little tight range like this. If you do it with a decent amount of size, and especially if you're on the wrong side of the range, maybe you're going long anticipating a range breakout, and then it gets rejected and sells off. Even though it's like 20, 30 cents, let's say you took 2,000 shares, you'd be losing $600 pretty quick. And then you get, long the other side. If you don't wait for confirmation, you try to force trades like this, you get frustrated, and you kind of, you piss away money that you otherwise could have just kept if you were just more patient or were doing something else. I've seen it time and time again, and it's more so on the option side that it happens all the time. You can't force anything, especially, trying to take size, because you think maybe it's going to push it out or something like that. It doesn't work like that. So keep that in mind. Risk reward always in check. There's no excuse not to be setting up charts with risk reward. Just for a quick little, because there's guys that are new in chat, risk reward, if you watch the video, basically 3-to-1 risk reward is what we are looking for every single position. And what I mean by setting up risk reward every single day intraday, if I saw a setup like a 13 EMA cross to the upside, this is something the new guys would learn, 13 EMA cross to the upside, I better make sure that from this entry, that 13 EMA cross, I have at least 3-to-1 risk to reward. If I'm risking below this level here, I should have, from this entry, let's call that 50 cents of risk. I better have $1.50 of room to the upside minimum from this entry. If I don't, then this trade does not make sense. In this case, obviously it wouldn't make sense because 13 EMA cross, 50 EMA is right there, like 40 cents, 50 cents away. That's like a 1-to-1 risk reward ratio. That's not good. That's not what we want to look for. 3-to-1 minimums, always. There it is. So patience on position, scale out, hold pieces, 50 cents to 1 point, take money, hold quarter for the what if. So both on the options and the equity side, I kind of have same sort of philosophy. On the equity side, I really wanted to, because we typically play big cap stocks, like we're playing something like a Shop or something like an Apple. Where are we taking money off? We're taking money off up a point or 2 points, 3 points. We're not going to be taking money off up, 50 cents. It doesn't really make sense. Even on a Shop, you're probably waiting like 5 to 10 points to take, a piece off. Let's go to a smaller stock, like maybe like BA, if this is a better example. BA, as it pops intraday, you get a point to 2 points on a big cap stock like this. You're going to be taking, a quarter off, 1/2 off intraday. Intraday moves are not as big. You don't have as much range intraday typically, unless you're breaking the range to the upside out. You're making a new high of the day or a new low on the day. You won't get that range. If you're trading within the range that's occurring right now, like let's say I was trading this little flag here. So I took the flag break on the upside. I shouldn't expect to get a huge move to the upside. We know where the next resistance is. It's going to be that high of the day, pretty much 153.74 from the 149.38 area. Get up 2 points. You're going to want to take some off stops, obviously below that 13 EMA. If you're on the option side intraday, same thing. We'll be looking for 50%, 100% to take some off, and then we're looking for further continuation higher. As you get closer to the end of the week, these percentages can go up because obviously we're trading closer and closer to a lotto contract where there's not as much premium in them, so they're very cheap. And we're usually trading those out of the money contracts. But it's the same concept. You still want to be locking in money intraday, especially if you're trading within that intraday range. If you're trading outside of that intraday range, you can have more conviction on the trade. So let's look at an example of that. Let's just talk about something like Roku yesterday. Because Roku wasn't really ever trading within that intraday range, you could have more conviction on it to hold. And this is why I kept saying hold it, hold it, hold it, hold it, hold it, hold it, hold it. After the morning when it started to trade back down and then within that range, then I would say, yeah, you want to be selling into those pops. And if you break that high, then you can look to roll it or whatever. But this is the type of mindset you have to have when we're stuck within a range. Don't expect you're going to get these massive moves because you just won't. There's too much resistance or support within the way. Frequency higher, moves typically smaller. So if you're trading intraday, the moves are typically smaller. If you're within the range, if you break that range higher or lower, the intraday range, you can get a bigger move. Absolutely. But it has to make a new high or a new low. Within the range, not so much. A lot of scalp trading happens intraday, and there's nothing wrong with scalp trading. It's a good way to generate some income. but it's just that it's scalp trading. You're in and you're out, and then you're looking for another setup. Looking for another flag break, whatever. You don't continuously try to get in and out of the same position. You're going to probably have to look at another stock. If you're trading a low float stock, especially, one and done is what I always say. Nick, can we ask questions now or wait till the end? Yeah, go for it, Nick. Ask questions as we go. Absolutely. So intraday, what are the kind of the main concepts, the main ways that we got to be thinking intraday? A couple different things. Biggest thing is, okay, intraday, trading, all that stuff. How do we generate ideas? Idea generation is one of the key things we want to talk about. So we're going to go through some scanning examples, how I set up or how I scan, how I generate ideas, etc. The side charts and side watch lists must be full. So we must be having some sort of list already prepared every single day that we want to look at. And this is really easy to put together. I'll talk about that in a little bit. If you don't look, you won't find setups. And this is a key thing. If you guys notice, I'm going through charts, especially if you're in live chat, constantly. Always flipping through charts. Always, always, always. And the reason why is I'm constantly looking for setups. I don't let scanners do everything for me because I find that scanners produce the same results that other people get and you won't have an edge on them. But if you can find the trades yourself, you're going to have an edge on anyone else because no one's finding those trades besides yourself. And that's important. And that's how we get into these positions that no one seems to be able to get into, that can cause these massive run-ups. So we'll talk about, that a little bit. Important to understand recent sentiment to cycle through those stocks or sectors. One thing that we do every single day, and one thing that I always take note of is, and I always try to tell, the room or whomever, is I always say, I notice that this sector, there's money flowing into this sector, there's money flowing out of this sector's weak, this sector's strong. We have to pay attention to the market and what's the relative strength or weaknesses in each sector. We'll talk about a really easy way of doing that in just a second. Lastly, what are some of the ways that we can scan? So what do you guys think? What are some of the ways that we can scan? Just general ways. Just don't think of like using a scanner. Just like, what is the general way we can scan for stocks or ideas? Watch list, sure. What else? And this is a good idea to, because you're going to want to generate ideas on your own. Watch list. Flow algo. So we'll just call this like scanners. News wire. So do you have to be looking at a news wire? Where else could you be looking to find news? Chat room, Twitter, social media, CNBC, etc. Pre-market high low movers, yeah. Percent movers, percent gappers. What else? Yesterday runners, like that one. I always go recent runners, right? That's kind of how I build my watch list, but that's great. Someone said earnings. This is coming into play. A lot of names with earnings are going to get continuation. Anything else? What about biotech? Biocatalyst. Sympathy moves. Good. Okay, so we got a whole bunch of different ways that we can scan for ideas. And these are all fantastic ways to do it. The key thing, though, is when we use a scanner or we use someone else's idea, we have to bring this idea into our world. So what does that mean? It means that when we look at these ideas that are generated from outside places, they have to meet a few different criteria, right? And well, that's not good. Whatever. I'll just delete that for a sec. So they have to meet a whole bunch of different criteria. One thing, and the foremost, is always we need some sort of setup. So a flag break, an EMA cross, a range break, etc. There has to be some sort of setup for an entry, and it has to have the risk reward in check. Now, within these two concepts, you could have other little things like there has to be liquidity and all this other things, but these are the two main things we always got to make sure. Is there a setup that makes sense that I like to take? And it has to be your setup that you trade. If there's not a setup that you trade in that particular situation, it doesn't make sense to take it. Setup and risk reward both have to be in check for you to touch the trade. Setup makes sense, great. Is there enough room for me to make what I need to make with what I'm willing to risk on this setup? Yes or no? If you don't know how to figure out your risk reward, you got to get pretty quick at it. And I can help build your risk reward profile. And the whole concept behind it, guys, obviously is I got X amount of shares and I know I can risk 2 points to make 6. Does this setup have 6 points of room to the next peak or the next resistance level to the upside? It may or may not. So we got to make sure that we're checking that type of stuff. Don't just take a trade. If you notice, every single trade that I give you, whether it's in the whether it's intraday or on the swing side, I always tell you what the target is because I always want you to figure out and know where it has room to, because you got to know whether or not it meets your risk reward. That's the most important thing. So big thing there. Intraday scanning. Let's talk about watch lists in general, because watch lists are some of the main ways that I do it. And a lot of the times, and I actually usually use my my phone in front of me, and I have, because I build the watch list usually outside of market hours, or I'll just do it on my phone as I trade, just because it's kind of easy to, after you have like a bunch of watch lists. I use that stock tracker app, and then it's easy to quantify watch lists, put them in there and go through it. But anywho, watch list, predetermined, built from recent stock traded. So there's a couple of different ways that I do it. Recent trades. So I have a revolving watch list of things that I've been trading recently. So for instance, if I was going to have this watch list for next week, the watch list would include like Roku, Netflix, BA, Amazon, Shop, Guild. Recent stocks that I've been trading. What do I know? I know that recent stocks that I've traded usually have momentum in them and range. So you can expect that range to continue to some extent. We can use a watch list built from FinViz. So real quickly, guys, if you haven't used this website, it's fantastic. I'll show you how to build a watch list, and I'll post it in the group. Depends on what you're scanning for, but let's say you want to play big cap stocks. Big cap stocks, you obviously want them to be liquid. So big cap stock, you'd want over 500,000 in volume. Relative volume. Now what this is, how much volume is there in the stock compared to what's on average traded in the stock. So relative volume important. Average volume, if you want to, you can set that. It doesn't really matter. But this is where you'd want to start, right? Current volume, mega cap. This is going to produce a list of stocks. You can further narrow this down to sectors. And the reason why you'd want to do this is, let's say you're looking at the market. A really good and fast way to check what has relative strength and weaknesses like this. You click on the heat map. In FinViz, you've got the heat map. You can just click on it. Look at what the SPY is doing. If the SPY is up that day and you see things that are down, or a sector that is down, relative weakness in the sector. If the SPY is down that day and you see things that are strong, there's relative strength. In this case, SPY was up. What sectors did we see some relative weakness in today? Okay, well, it's pretty easy, right? Technology, multimedia, graphics, and software, all of those names were down today. Healthcare, all those names were down today. The cool thing about FinViz is, if you want to go to dive into further these ideas, you can just click on the, oops. No, well, I mean, it doesn't really matter because you can see them all, but you can just click on the sector and they all pop up in a little bit of a watch list. And then you can go through these names yourself, or you can put them into a watch list on your phone, something like that. The more watch lists you have built, the faster it is to go, okay, the sector's weak, the sector's strong. I want to focus on today, let's say the healthcare name's short because there's relative weakness in these names intraday. So what you could do is start bringing up these charts intraday. Let's look at UNH. Relative weakness, it's probably going to sell off the entire day. Let's look for bear flags. Let's look for range breaks to the downside, so on and so forth. You can look for these types of setups. Multimedia names, EA, ATVI, etc. Is there a flag break or a range break to the downside we could be taking, etc. So pretty easy to figure out and weed things out. If you are someone who plays, let's say smaller cap names, go nano. Price, you can put it under probably $20. Current volume, probably over, let's go over 300K. Relative volume, 1.5. And there you go. Let's say you like to play stocks with higher short interest, low float stocks. There you go. Now you got a list. It's pretty easy to scan through things using this FinViz screener, guys. You just got to know what to screen for. Usually it's the cap and volume and then price is what you want to be looking for. You can further go into technicals if you want to. I really don't care about that. It's more so just looking at these types of things, looking at what's got more volume than usual, what actually has constant volume, and then looking at what sector and market cap you want to find. So pretty quick way to put together a watch list in that regard. Watch list from recent morning plays. So things that have happened in the morning, then this is a really good, because I always do look back at these trades. So I tweet out the list every single morning of what I'm looking at, because these are stocks that are gapping up or gapping down with range, or gapping up or gapping down with volume. So in this regard, you can put all these names that we have recently into a watch list, and you can scan through those names intraday. And I do this quite a bit. So for instance, let's just quickly put this back up. Now, for instance, today we were going through, we did look at these intraday many times. Tesla's are another play in there intraday. NVIDIA, BA, Guild. Obviously we saw one in BA end of day. We saw one in Guild end of day. When we didn't really see much. I mean, there was. I guess you could have taken that range breaker 50 EMA cross to the upside and played it to the high of the day, and that would have been fine. Get a little setup there. Nick, so at the open, when you say go long or short, how do you get conviction right at the open? So Nick, if you watch the webinar that I did last week, it talks about trading off the pivot points and trading the morning open. That's how I have conviction. It's you typically looking at the price action, breakthrough levels, especially those pivots, and holding those levels and knowing where the next resistance is what gives me the conviction. Yes, always check volume. Volume is the most important thing in the morning. What if the target never hits, Gus? What do you mean, what if the target never hits? Are you going to continue? Are you going to hold the position and go, if the target doesn't hit, I'm going to let it either hit the target or go to zero? Or are you going to exit it if the trend breaks? You're going to exit it if the trend breaks, right? You're not going to just hold it and hope the target hits. Target's just a target. Risk reward doesn't have to always hit the 3-to-1. 3-to-1 is the opportunity you want to place yourself within. That's what risk reward is. Doesn't mean you're always going to get 3. Doesn't mean you're always going to lose 1. It's just the opportunity you place yourself within. You trade within those parameters. A good way to think about it is like this. You see a trade, you see a stock. This is the range, your risk reward that you're trading within. The downside of that range, your stop area, is hard. The upside can go on forever. We just want to make sure that the parameters you place yourself within are controlled. The trades that you place yourself within are controlled. That's the whole concept. When you're referring to most recent range, do you mean the last 10-minute candle or the range all day? Intraday range, RD, is the intraday range. I mean, that's the range from the high of the day to the low of the day. The most recent range is usually last day's high or low. It depends on, what you're saying. Intraday is obviously intraday. Most recent would be, the last day. I would say last day range. Yeah, no worries. So watch this from recent morning plays. Write down, enter the stocks in the watch list every morning. Really easy to do. Scan through these throughout the week. You can find setups all the time on this stuff. Watch this from news plays last week. So like EROS guys will be on a watch list for next week. I will look at it next week to see if there's some sort of setup during the day. Watch list from recent earnings plays. This is going to get and become huge in the next couple of weeks because obviously we're getting into earnings season. Watch list built from extremely built down or parabolic stocks. So, if you got like, how many times have I played it? Have I even looked at ERI or CCL in my trading career in the last? Let's just say this: how many times I've looked at ERI and CCL in the last 1 year? Besides, if we take away last month, never. I honestly didn't even know like what these stocks really were. When stocks get really beaten down, I always take note of them. And I always put them into a watch list because these are the ones that are going to have a ton of range if they start to bounce. Or if they get really extended to the upside, they're going to have a ton of range back to the downside. Great names to be putting in a watch list and to be looking at because when these things move, like I said, the bigger the range, the more they can potentially pay. How can you build a watch list for this? Easy. Go to FinViz again. Go to the screener, go to 52-week lows or trading 10% off the 52-week lows, something like that. Let me show you. Really fast, easy way to do it. FinViz screener. Go to the technical side, 52-week low high. Go to %10 or more above the low. And let's just go back to the descriptive. Let's go to, I don't know, mid market cap. Current volume over 500K. Let's go under 50 bucks. Relative volume 1.5. Okay, so now we got a whole bunch of stocks that I've been trading near the lows that we could put on our radar. And you can just scroll through these and look at the ones with the most range. So APA, that's a good one. ACIW, possibly. You have to look at the volume there. BMO, no. BRKR, that could be a good one. BSX, no. BAVN, yep. So this is how fast you can just do this. Citibank, yeah, definitely put the banks in a sector. CAE, yes, look at that little range break set up. So have all these stocks on a watch list. Great thing to be going through intraday. And lastly, get creative how you build your watch list. I mean, there's no right or wrong way to do it. These are just some ideas and the ways that I do it, guys. What do I like to trade? I like to trade range for the most part. I like to trade range and I like to trade stuff that's liquid. And I usually like to trade big caps or mid cap stocks with liquidity on the option side. Those are my 3 criteria. I build around that. How do I build around that? Well, typically names that are from earnings usually have liquidity. They're usually, tradable on the option side, etc. Beaten down names usually have range, usually more liquid as well, etc., etc. So build around your own criteria, your watch list. Is there any other way to get an idea that the stock will continue then the trade out of range into earnings? SJP, what do you mean? Is there any way to predict what a stock's going to do into earnings or on release of earnings? Is that what you're asking me? No, there is literally no way to predict that. If you have that information, that's insider information, and if you trade off of it, it's illegal. There's no way to do it. There's no way to predict what a stock's going to do off of earnings. You can look at the sector and what the sector has done into earnings. Like, let's look at Netflix. Let's say Netflix has a killer quarter. They do extremely well. Subscriptions up. How does that reflect on other names in the sector? How can that reflect on Disney streaming? Well, maybe their streaming is going to be up in sympathy. So we can look at other names in that sector in sympathy of the other people's earnings, but we still have no idea what the hell they're going to report. No clue. I mean, how do you get an idea that the stock may continue during the day? Oh, gotcha. Like, how do I know whether a stock's going to continue going higher or lower intraday? Because that's a completely different question than what you asked, though, boss. It's all based off of the trend in EMAs. We'll talk about this a little bit once we get into the examples. But if a stock is holding its trend, it's going to go higher. If it breaks out intraday, it's going to go higher. We'll look at examples in a second. How can you tell if a stock's going to continue to go higher after they report? I have an earnings webinar, SJP, which talks about that. But typically, it has to do with, has the stock been bought in earnings or sold in their earnings? What's the expectation? Did they do well on earnings? Did they raise guidance or lower guidance? And then it's just the technicals after that. Intraday. Alert. So preset at range breaks with room. If you guys have traded with me live, you know that my charts are always, or my system's always just dinging nonstop. Basically, it's because all these are just alerts setting that are going off. So what I like to do, guys, is this. I'll look at a stock like ERI, and what I like to do is I set range breaks. So I set alerts at range breaks. So you can see there's one right here. If the stock crosses above this 2028 spot, it's a range break to the upside. I'll probably set one a little bit closer now. Yeah, there's not really a close range break, actually. But what we want to be able to do is have all these set all over the place. And the reason why is these range breaks can happen at any time. Most of the time they do happen intraday. And this is where I get the idea to go long something or short something, especially if I'm looking at the option side. I'll have the alert set. So ALGM breaks out. I'll bring up the chart. I'll look at the day. Okay, it breaks out intraday. It's got room to 201.33. And then I'm right away looking at the calls. Okay, which ones would make sense? It's got X amount of room. These ones are cheap. These ones are expensive, whatever. Alerts are one of the best ways to go about finding setups that are predetermined to be good. It doesn't take a lot of time to set these alerts. If you guys notice, I give you a side charts every single day. You can use the alerts from that. You can also just quickly go through charts. And like I said, set them at very easy, clear breakout areas. Range breaks to the upside and the downside. Most powerful on the daily chart. That's where you want to set alerts. Is there a way to see that the range break is powerful? Well, okay, SJP, what would make a range break powerful? What would make it weaker? Let's just talk about that. This should make it very clear. So if a range break is going to be powerful, what has to be behind it? Volume, okay. What else has to be present? For a range break to be powerful, guys, what has to be present on the daily? If I wanted to, there you go, Jonathan, room, exactly. The stock would have to have a lot of room to the next resistance. So the more amount of room the stock has to the next resistance point, the more it's going to be, momentum or a bigger move, the more powerful it's going to be. There's a reason why stocks, when they break all-time highs, tend to go higher and explode. Case in point, Amazon this week. Range break to the upside. All-time high range broken, and it just ripped. Huge breakout. These are the types of range breaks we want to be looking for. Ones with room are going to give you the most powerful moves. Simple as that. So use your watch list, go through the daily charts, set the alerts. Alerts get set at breakout areas that make sense in terms of your account. They're quality setups. When they trigger, hold up the chart, see if it still makes sense because it's a predetermined alert by you. Fantastic. Trade probably is going to work and you'll be in it early. Most of the names that we get into, guys, are off of alerts intraday, especially on the option side. So make sure to just spend the extra time to do it. Alert gets triggered, bring up the chart, look at what you're trying to do on it. Does it still make sense to take the trade and then take it? Simple as that. Where can we set alerts? Not just range breaks. Those are my favorite places to set them, and primarily where I do put them. You can set them on flag breaks. You can put them on breaks of the 50 EMA, the 200 SMA, the 13 EMA. So the main EMAs or SMA that we use on the daily chart. And then obviously the ranges, right? Those are the other areas. So let's talk about intraday scanning that I do when I just flip through charts. So you guys notice that I'm going through watch this and going through charts, right? Now that's all great and that's all dandy, whatever. But we need to know what to be scanning for visually. Now, what are some of the things that we can scan for visually? I kind of just showed you the slide, but what type of setups would we want to look for intraday, guys? Let's look at just like a basic chart, like Apple or something. We'd want to look for what? Flag breaks, sure. Range breaks, yeah. High-low breaks, yep. Extensions, yep. 50 EMA crosses, sure. 13 EMA crosses, parabolic trend breaks, parabolic breakouts. One of my favorites is the last day high or low break. That's a fantastic one to be looking for. I mean, what else do we see on this chart, guys? There's so many different setups. Let's just label them all, actually. So we can be scanning for downtrend breaks, right? Downtrend breaks, 13 EMA crosses, maybe a 50 EMA cross, last day low break, which is that purple line. You could be looking for a last day high break as well. Pre-market low break, pre-market high break, 4 EMA extension, which is one right here as well. Uptrend break or a bear flag, right? Range break to the downside intraday, so on and so forth. There's a ton of different things we can be looking for, but if you're not scanning through charts, you're not going to find them. The biggest thing is this: when we scan, guys, as you know, you want those 3 time frames up: daily, hourly, 10-minute. 10-minute intraday setup, daily tells you where it has room to, primarily. So you want to make sure that you're looking at that daily to see where exactly that stock has room to as you scan, because that's going to tell you really quickly whether or not it actually is an opportunity that makes sense to look at. I think the easiest plays to look for intraday, guys, visually, are always the 13 EMA crosses. 10-minute 13 EMA curl to the upside. It's a money position. Very low risk, nice high probability trade when there's confirmation. What is confirmation? Confirmation is when you get candles closing above resistance levels intraday. What's intraday, by the way, guys? I would say intraday, you want candles to close after the first probably 60 minutes. Then you can start looking at intraday trades. Candle crosses the 13 EMA, yes. This would be a long position. You take your starter on the cross, the candle actually closes above it, you add into the position full size. Stops would go underneath that 13 EMA. And in this case, you'd be looking for that 50 EMA reward to the upside, which ended up hitting into close. And that's why we actually got into those calls at the end of the day. We're looking at those 50 calls or those 280 calls based off of that 13 EMA cross. I figured, okay, it's got room to the 50 EMA. Why the hourly and what EMA on the hourly is money? Nick, if you watch the old webinars, I go through all that. I go through all the time frames and the EMAs I use on each. And I explain how they all work and then how they all work together. So it's, you definitely have to watch that to understand. But real briefly, I use the 50 and the 13 on the hourly. On the 10-minute, I use the 50, 13, 4, and 8. And then on the daily, all the ones that I use on the 10-minute, and then I also use the 200 SMA. What is the trend indicator to keep overnight? Indication overnight So if we're looking to hold something into the close, we're always looking at the stock to close near the high on the hourly above the 13 EMA. So let's go to something like Tesla. So if I want to see continuation on Tesla, I need Tesla to close near the high of the day. And I also need it to be above the 13 EMA on the hourly at that high. So if we look at the hourly chart, the 13 EMA, it's at the high and way above it. Fantastic. High probability of continuation. You can take that trade. There is another thing you do want to look at, which is obviously the daily chart, how much room it has to the next resistance area. In this case, Tesla broke out of the resistance, had room to the upside for continuation based off of the daily. Did Shop have a similar close today on the hourly or on the daily? Yes. Let's take a look at Shop though. If we're going to be looking to swing this overnight, what would be an issue with it? 4 EMA extension to the upside is all. Does it have another day in it? Probably gets to like 620s, I would think. And then we'll probably get a little bit of a pullback unless some sort of news comes out negative on the stock. But yeah, for the guys that are new, I mean, this 4 EMA extension rule is something that I use all the time, every single day. You'll come to, live and breathe by it because this will keep you out of a lot of trouble. You'll know what I'm talking about once you watch it. Please talk about what gave you the conviction on Shop throughout the week. It was the daily chart, G-Car. It broke out and it had a lot of room to the next resistance. 471 was broken. Technical next resistance 513. Why wouldn't I want to hold that position? After it broke that resistance, technical next resistance is 550. We're talking 50-point gaps to the next resistance level intra-week. So there's a ton of potential for these calls to really pay you money if they can get in the money. When you say a 13 EMA cross, simply talking about a candle closing above it. I'm talking about the price going through the 13 EMA to the upside and a candle closing above it, yes. So in this case, 13 EMA cross to the upside on Shop would be when it crossed it here and the candle closed above it. That's it. So let's talk about intraday scanning in terms of creating some sort of scanner. If you have the ability to create a scanner on your platform, guys, EMA cross scans, 13 EMA, 10-minute. So if you get a price of, price crosses 13 EMA up on the 10-minute, 5-minute or 15-minute, fantastic, use that. You can also look for a 50 EMA cross to the upside or the downside. I think that's a good scanner to be using. In terms of volume, you'd want 200K relative volume 1.5. You can scan for blocks, anything above 25K. Percentage movers, 0.5 to 1% within 5 to 10 minutes. So basically something that's kind of moving quickly within 5 to 10 minutes. You probably want to make sure that the stocks are like over 20 bucks if you're going to be doing that, or 30 bucks, just because, penny stocks or the dollar stocks will fill your scanner up because they can move percentages really quickly and they'll do it all the time. Morning high break scanner, morning low break scanner. Volatility greater than 1, volume greater than 200K, unusual volume. So these are just really easy ways to set up scanners. Most of your brokers have a scanner built in that you can just fiddle with the settings and input this stuff. You can take a screenshot of this and throw them in those scanners if you want, guys. I don't use an intraday scanner. I literally just go through the watch list because I find it's more effective. But if you don't have the time to do that, then this is a way to do it, or streamline that process a little bit. So, and I always like to call, when I scan through intraday, guys, I call it like the human algo scanner, right? I'm looking for the right setups. I'm making the decisions. I'm picking and choosing the setups I want to trade based off of the setup and the risk reward. So we scan for the tickers. We determine the good setup. So when an alert triggers or I'm going through setup, risk reward's the first thing I look for. If it makes sense, setup then makes sense, then I'll take the trade. We always want to make sure that because if you notice, whenever someone brings something up, guys, I always look at the daily chart. It's to make sure that the stock has room. If it doesn't have room, there's no point of trading it because it's just going to get rejected and probably pull back. So real 3 things, real basic scanning intraday, guys, that you can do right out the gate, right after, on Monday, Tuesday, whatever. 3 ways, 3 things that we can look for. So those 13 EMA crosses that we talked about, to the upside or the downside, these are money on the 10-minute chart. How do you play them? Take the starter on the cross, add into the position on the candle closes above that level. Green candles do close at the top. Red candles close at the bottom. Just an FYI. Let's take a look at a short example. What's something that rolled over today? I think Zoom rolled over at the end of the day, right? Yeah, there you go. Here's a really easy example on the short side. Zoom breaks the 13 EMA, take it short, add on the close of the candle. Obviously, your target's going to be that 50 EMA. Your stop's going to be right about the 13. Super easy setup to take, super easy setup to see. Something that you can scan for visually all day and take all day intraday. Flag breaks. Boss, sometimes when I take the crosses of the 13 EMA setup and set up my stop at the break back of the 13 EMA, not enough room. You have to, okay, so one of the key things is this, Philip. If we're taking if you're taking any trade intraday, what we have to do is pay attention to what this intraday range has been. Oops. Look at the intraday range of the stock. We're talking 3 points, right? 3 points intraday range when it's within a channel. If this stock is breaking down, I need to understand you're probably going to see some sort of similar range to this. You always want to see what the most recent range was intraday and then adjust your stop accordingly to it. So if you're risking just above that 13 EMA, like 10 cents, you're probably going to get stopped out. You're probably going to have to give it a point or a point and a half off of that 13 EMA. So always make sure you're seeing what that range is and then adjusting the stop to it. You're going to have stuff that trades very tight in a range. Like for instance, that SPR today was a pretty tight, it's a pretty tight range. I mean, we're talking, the stock only really had a point of range or a point and a half of range intraday. Whereas if you look at something like SHOP, of course you can't have your stop right at below that 13 EMA because you're going to get stopped out. It's got to be like 5 or 10 points off of it because, this thing has, it trades in ranges of like 20 or 30 points. So you have to look at the situation, then adjust your stop to it. Give it enough room from that 13 EMA. Your size is going to adjust based off of what's actually occurring on the stock. So make sure just to view the whole picture. Where do you stop out if it range breaks does not? We'll look at the range breaks in a second here. Flag breaks, 10-minute, 1 hour daily, bull or bear. One of the places, easiest thing to be looking at intraday, guys, is obviously flag breaks. I mean, flag breaks are super easy to spot. I have one trader, or had one trader. He's profitable now. He had issues with profitability, and I said, just focus on one setup. I said, focus on literally flag breaks intraday, and that's all you trade. Bull flag breaks intraday. That's all he traded. Did it for a year. Did fine. Built his account up. He got really good at trading them because of the simplicity behind them. They're easy to recognize. They're very black and white. Downturn breaks after a run up, take your starter position. Risk below that flag range. And you're looking for, obviously, the first spot is going to be the top of that, the top of the range for the day. You break through it, you can get more room, great. But these are really easy plays to take, especially on the big cap stocks. If you wanted to take options, like we did, I was kind of waiting for that intra-flag range, which we did wait, and it did break through it. Once it broke through that intra-flag range, I was looking for that high of the day. We had the 590s, and it looked, it worked nicely. But you have to make sure that, it confirms before you take it. on the big cap stocks. If you're playing a small cap stock, what's the small cap stock that ran today? Not EROS. Let's take a look at something. Oh, Codex is a good one. Smaller cap. There isn't really any flag breaks today, but we can look at the one that happened yesterday. So flag break occurs on Codex. Very easy black and white trade. On low float stocks, you don't need confirmation in terms of candles closing, guys. You take the position right when it crosses that downtrend and add into it if it continues to push alongside that 13 EMA or holds up. Simple as that. Do I always use a 10-minute candle on my charts? Yes. I also created a strategy, Gus, for people that can't or have a hard time transitioning from what they're using to a 10-minute by using the 3-minute chart. You'll see that when you go through those other webinars. It's a super simple strategy for entering and exiting positions, and it works well. So Codex, flag break, take the position based off of that. First position or first target's going to be the high of the flag. And then if that level breaks, you're looking for the next level on the daily to the upside. But pretty easy stock and pretty easy setup to see. Obviously worked nicely. I have an issue playing the chart with options as far as stops go. Because if I'm playing the chart and it's intact, but my premium is decayed below my stop price, how can I remedy this, Gambit? Reduce your size on the option so that you can deal with those larger percentage pullbacks. That's the way that you can remedy that. Now, the biggest thing with that, Gambit, is going to be recognizing those situations. So how can you recognize a situation where you would need to reduce your size? And anyone can answer this question. If we're trading options, how can you recognize a situation where you would need to reduce your size because there will be premium decay? And I'm assuming you're trading an out-of-the-money contract, Gambit, right? If I'm trading an out-of-the-money money contract, what is the biggest factor that causes out-of-the-money contracts to increase in price? If you're trading a big or an out-of-the-money contract, what is the biggest factor that will move that contract is what I'm basically saying. It's velocity. So it's not volatility, it's velocity. It's the speed of the move. The speed of the move will dictate how fast that contract increases. As the speed of the move increases, premiums get juiced because of the volatility increases. If the speed increases, there's going to most likely be more range. If the stock has or is trading in a slow trend or tight range to the upside or the downside, you tend to get premiums pulled out of the stock. So one of the things you want to look at is what the range of that stock has been and how quick the movements have been, Gambit. If they seem like it's really slow curls and eventually breaks out, that would be a position you would want to reduce your size in. Now, if it's something like this shop, it's got a ton of range. It always trades in a huge range. It's not really trading flat at any given point in time. You wouldn't really have to, you're not going to be huge on it just because the range is big, but you would know how to position yourself for that one. Do you slide with the setups for the chart? Gus, I'm not sure what you mean there, boss. Do you slide with the setups? Do you slide? Maybe you can rewrite that question, Gus. I'm not sure what you mean. I still don't know what you mean. Do I have a slide? Oh, do I have a slide with my setups? Like your scanners? This is the slide right here. 13 EMA curls, flag breaks, range breaks. This is why we're going through examples right now. if you want a very basic theoretical example, I'll show you them right now that I've drawn out. This isn't another webinar that I do called chart patterns, but this is theoretically what they look like. We're going through real life examples because I feel like it's more beneficial to go through them right now. This is what 13 EMA curls look like. Very gradual curls, typically 13 EMA crosses, and then they end up speeding up. 13 EMA curl, 13 EMA curls, that's one, right? Flag breaks is the other one that we're looking at. Very simple, flag breaks. Breaking that downtrend after a uptrend has occurred. And then you get your continuation. And then my personal favorite for intraday is those range breaks. Stocks trading within a range, breaks a range to the upside, continuation higher, breaks a range to the downside, continuation lower, which leads me to my next example. Range breaks, 10-minute, 1 hour daily, bull or bear. So I don't care if it's on the 10-minute chart, intraday range break, on the daily, which is what I really want to look for, is these intraday range breaks, because these are the ones that cause big moves, or the hourly. You're going to see the hourly range breaks in the 10-minute ones, you know, at the same area. But these are the main types of things that I want to look for intraday, because these are the biggest setups that cause larger movements. And these are the best, I find, options trading setups to look for is the range breaks. 13 EMA curls are great. Flag breaks are, you know, great for scalping, I think. But the range breaks are what really causes big price movements, and primarily, like I said, breaking an intraday range either to the upside or the downside. So if I'm looking at something like Roku intraday or Shop intraday, I'm looking for that high of the day break. So Roku, range break from the last day, and then we got our big continuation, you know, the next day after that. You had that 2 days in a row, actually. Broke the last day's high, and then you got your continuation to the upside. This is what causes movement. And this is what the best option setups will be based off of, range breaks, because we want that velocity, right? So it has to be making a new high that day or a new low. Which webinar is on EMAs, Spartan? Like I said, Nick, if you go to the beginning of all the webinars I've done, just scroll right. At the beginning of those webinars, I always cover my system, which it goes over all the EMAs and timeframes. So that's what you want to watch. Anyone new, obviously, you know, if you didn't watch those videos yet, it's going to be a little bit confusing, but once you do, everything will make sense. Quick question, depends on the candle time frame we choose. The pivot points are different. If I'm taking 1 month contract, what is the ideal candle time frame I need to choose? So MB, if you're taking 1 month contracts, what do you mean pivot? Are you talking pivot point? Or are you talking confirmation? I'm not sure what you mean. If you're taking so if I'm taking a monthly contract, the quick question, depending on the candle time frame we choose, the pivot points are different. No, pivot points stay the same on all time frames. If I'm taking a 1 month contract, which is the ideal candle time frame? Let me ask you this, MB. Let me ask you, no, support and resistance never change. Support and resistance are based off of daily charts, weekly charts, and monthly charts, and they are consistent across the board. They do not change based off of the time frame. A support on a monthly chart is still going to be a support level on a 1 minute chart. Are you asking me this? What time frame would you look at for swing trading if you're going to be using a monthly contract? I feel like that's kind of what the question is, but I'm not sure. It's a little confusing. You would look at a daily chart, weekly chart, or a monthly chart if you're going to be swinging. I got a webinar on swings that you guys can watch as well. So if you want more information on that, go for it. So anywho, range break, guys, 10-minute, 1 hour daily, bull or bear. Take into account the daily trend, intraday range, and the 50 EMA. So if I'm looking at a daily range break to the upside, like I was on Roku, look where the 50 EMA is, look where all the EMAs are, look where that next range is to the upside. If I break this range at the 101.63 area to the upside, where's the next resistance point? Technically, we got room towards 115 or the 116 area, and then into the 120. Based off of that breakout, do we have a lot of room to the upside? Absolutely. Do we think that we could see a strong continuation because we got all the EMAs crossing to the upside? Absolutely. Is this a good options play to take? Most likely, yes. So if that happens intraday, a breakout like that, you definitely want to look to get into that position. The one thing I would say is this, guys, when you get daily range breaks intraday, you have to wait 10, 20 minutes for that to confirm. If it's an intraday range break, you just use the normal 10-minute candle. If it's on the daily, you got to wait a little bit longer, 10, 20 minutes. It was based off of the daily weight. All the support and resistance levels are based off of peaks and valleys that I draw off the daily. Again, this stuff, guys, that you're asking this really general about the foundation of the webinars is if you watch the beginning ones, you'll learn all this stuff. So don't worry about it. Do I consider after hours pre-market EMAs like crosses for range breaks? Yeah, Nick, you can, yes. So you can get pre-market highs or lows breaking to the upside or the downside. Those are really good positions to actually take because you do tend to get continuation, and EMA crosses in the pre-market as well. Sure. Thomas, for scanning, how helpful are multiple monitors with multiple charts set up worth the investment? Well, Thomas, I got six screens. 2 are ultra wide screens, so they're like 1.5 each, and I got a laptop, so I got basically 7 screens I'm looking at. So I think that probably answers your question. That's very helpful. The more things that you can see, the more setups you can find quicker, which means the easier way, the easier or the better, the faster that you can get into a quality setup, I guess is what I mean. So intraday setups, what are some other ones, guys, real quick? 50 EMA breaks to the upside or the downside. We kind of went through a bunch of these when I was drawing circles around stuff. 50 EMA breaks up or down. 50 EMA breaks to the downside after a stock is ran is a really good short setup intraday. I love these because these tend to cause quite a bit of continuation to the downside. Let's try and find an example. Here's one right here. The stock's been moving, breaks that 50 EMA to the downside, tends to sell off to the low, or can break that and go even lower. So watch for these 50 EMA breaks down. Same thing, if a stock's coming off the low and breaks the 50 EMA to the upside like that Guild did, you can get a nice push off the lows. It's a full trend reversal that is happening. Breaking out a consolidation off the top or the bottom. So you break out of a consolidation level higher, break off a consolidation level lower, you tend to get continuation, right? Flag support breaks to the upside or the downside. That's pretty simple. You guys know flags, we already talked about them. Bear flags, bull flags, doesn't matter. Bear flag, take it short. Bull flag, take it long. 4 EMA extensions, upside or downside. This is probably one of my favorite setups to look for intraday. Shop had one today? Yes. So if you guys are familiar with the 4 EMA extensions, you'll know what I'm talking about. If not, I'm just going to briefly explain it. This is the 4 EMA, the yellow line, guys. When a stock gaps away and closes, price closes above that level, there's a 90% probability you're going to see a reversal. This is an indicator or a setup that I created, and it works extremely well. High probability, you're going to retest the 4 EMA. If that breaks, then you're going to retest the next EMA and then the next EMA. What's for sure is you're going to be testing this EMA. You can always count on that. You can get full reversals like this on shop, where in this case, the stock went from 580 all the way down towards 560, 20-point drop intraday based off of this simple setup. It's a fantastic setup to use. Again, one of my favorites to use intraday. 4 EMA setups, extension to the upside or the downside. Parabolic trend breaks, parabolic trends when they occur like they did on this shop here. What's going to be happening is you're typically going to be riding the 4 EMA to the upside. You can just draw the trend. Obviously, that trend breaks. You're going to be selling off towards the more longer term trend, which is typically going to be where the 50 EMA is, or if you just draw the longer term trend, you'll see it on the chart. In this case, the 50 EMA is closer than the longer term trend, which we can see is a little bit lower than that 50 EMA. Pre-market range breaks. We talked about this a little bit. Basically, you break that pre-market range to the upside intraday. You can look to take the stock long, break it to the downside. You can look to take the stock short, buying off the trend or shorting off the trend. So sometimes you get stocks that I don't really like these setups much, but you can definitely take them. And the reason why I don't like them is they're too slow moving for me. Let's look at something that's trending a little bit better than this. Zoom was trending nicely intraday. So you can be buying the stock off of intraday trends. This could be the actual drawn out trend line, which I kind of drew that really bad. So when you get a pull into this trend, you can look to take the stock long at any point here. Or you can be doing the same thing along the 8 EMA or the 13 EMA. Pull into the 13 EMA, look to take the stock long off of it. Pull into the 8 EMA, look to take the stock long off of it. Again, that's not something I really like to do. I like more breakout stuff, but it's definitely something you can do. Head and shoulders, inverse or normal, confirmed or not confirmed. So what I mean by this is head and shoulders is either going to cause a reversal or it's going to cause a continued breakout. Where's a head and shoulders example? Well, there's one right here on shop, or not on shop, on Zoom. You got your shoulder, you got your head, and then you got your other shoulder. If the price fails to get above this level over here, this is a head and shoulders. It's confirmed. You can look to take the stock short based off of that, and your risk would be right above this price, right? Easy setup to find. If you saw a head and shoulders reversal, which there's one right here, or an inverted or a normal head and shoulders breakout, so you're looking for a break of the shoulder to the upside to take the stock long intraday. What you want is the candles to close above that level. And then you got your breakout to this level. So what you'd want to do is take a starter on that breakout, add into the position once you get a candle closing above the recent range high. Pretty simple. Top curls. Basically, this is when you get a curl off the top to the downside. And primarily what you're going to be looking for is a 4-8 cross on the 3-minute chart. So a 4, and for the guys new, again, this is stuff you'll learn. On the 3-minute chart, when you get the 4 EMA crossing the 8 EMA to the downside, after an uptrend is broken or a parabolic trend is broken, you tend to get a reversal to the downside. Really good way to get it. Nice entry intraday. Great trade to take, especially on the option side. If you're looking for a way to nail down your entries, 4-8 crosses will do it. Previous day high or low breaks. So pretty simple. Previous day high or low break, break through that level to the upside, that level to the downside. You can take the stock long as it confirms. Remember, take into account daily trend, intraday range, and 50 EMA. Make sure, this is basically what I'm saying, make sure that the stock has room if you're going to be taking those types of positions to the upside and the downside. So intraday setups, these setups work both on the equity and the option side. All these setups right here, guys, are mainly equity setups. What are the main option setups? Main option setups are anything that is constituted as a range break. Oops, I'm gonna type this out real easy to see it here. Options. What do we want to see? Range breaks. So any sort of range break, any time frame. Flags. 13 EMA curl. Intraday. Three-minute 4-8 cross. And last but not least, 4 EMA extensions. 10-minute. These are the prime option types of trades that I like to take intraday in this list, in this order from strongest to weakest. Range breaks, number one. That's going to give you your biggest moves on the option side. Flags, 13 EMA curl, intraday, 3 minutes crosses, and then the 4 EMA extensions. These ones you can do on the equity side, and you can do them with ease because you don't have to worry about premiums and all that other stuff. And obviously entries aren't as important. So let's quickly go through some characteristics on the option side. Do you use the 4 EMA extension off the open? Oh yeah, Heath, all the time. You have to wait, basically 20 minutes for it to start working because you can't do it on the first candle, but yes, I absolutely use it on the open. If you couple the 4 EMA extension with a L2 and volume, you can pretty much figure out when it's going to happen before it confirms, like before the candle closes, which is fantastic. Because you get into a really nice reversal pattern position. If you try to do it, though, just play small size as you learn how to do it. Key is to anticipate larger moves when breakouts occur or if you see the stock has more room. So main thing is if we're trading options, we want to look further. If I'm looking at a range break, I want to look at the next resistance and the resistance after that. I want to see how far this thing can go. Just like when I did with Shop, Netflix, Roku, Amazon, Tesla this week, I was looking at this is where the first resistance is. After that breaks, we got room here. If there's a lot of range, that's something you want to be in and have more conviction on because it has a potential to give you a lot more than just a simple push into the next resistance point. So we want to make sure that we're checking intraday. So look at the 50 EMA intraday, look at the ranges intraday, look at the hourly. Primarily when you look at the intraday, you don't really need to look at the hourly, but sometimes the hourly, just because it's more a consolidated look at a short-term time frame, it gives you a way better picture. It depends on the person looking at the chart, but it will help. Daily resistance, obviously levels, the more room, the better. Like I said, the key is to look beyond the resistance levels. And another key is to look at the volume. Is volume increasing or decreasing on a breakout? If it's increasing, that's a great sign. We're probably going to get continuation. If it's decreasing, we're probably going to get a fail. Thing to consider on the option side as well is the delta. This is more so for earlier in the week. Look at what the delta is on the contract, guys. If you want to make 50%, 100%, whatever, and the contract's X, if the delta is doesn't make sense, it doesn't make sense to take the trade. I've dealt with a lot of options traders, in the last probably year, and one thing that I've seen happen is sometimes guys with the smaller accounts will pick options that are really far out of the money, and they fail to look at the delta. They just go, the option's cheap. I want to trade it because it's cheap. And then it goes up 4 points and they go, what the hell? My option didn't even move. And I go, well, look at the delta. The delta is 1 cent. You have to make sure the delta makes sense for the contract you're taking, right? Can you explain boxing with options? You mentioned briefly in another webinar, but hoping you could explain further. What do you mean gambit boxing in another webinar? Boxing my profits in? Or I don't know what the context was of the other webinar that I mentioned it, so it's kind of hard for me to explain what I meant. I think I know what I was saying though, and I'll try to explain what I mean, Gambit. But basically, it would be like being on one side of the contract. So let's say I'm in like 148 Zoom calls, and my calls are up, from here to whatever here, and then the stock breaks this uptrend. I would take the higher strike, let's say 152, and short it. My profit is boxed maximum within this level, but I can now make money on the downside as premium comes in. So that's what it means. That's what I mean by boxing. As premium comes in or as it pulls back, I could be making money on that way, still being in this contract that's up X amount of dollars. And then if it, eventually turns again after, like, here, let's say it pulls back to the support and it starts to hold the 13 EMA again, then I would cover the top of the vertical and then just continue to hold this side. So that's what boxing would be. Do you have a webinar explaining about the delta? Yep, and I can just briefly explain it to you too, Sylvia. The delta is how much the contract will move based off of a $1 move on the underlying asset. So if Zoom went up $1 and the delta was 50 cents, that means the contract will increase by 50 cents for every $1 move of the Zoom stock. So that's what the delta is. A delta trade is when the delta is bigger than the actual option contract. On, Lotto Friday, you typically find delta trades. Delta is a pretty simple concept. Typically playing big caps on the option side. If you're trading intraday, guys, you want liquidity. You want to be able to get in and out. The 5 cent, difference between this, the bid and the ask, it sucks, but it's not that bad if the stock has a range intraday. But primarily what we want to stick with is, the closer penny to penny spreads if we can. What is always highly liquid? Blue chips, big caps, SPY. Always highly liquid. Mid caps are not as liquid. And liquidity did get sucked out of the market on the option side after the sell-off. So that's something to note. The popular names will always be liquid though, but they'll have premium associated with them. So just note that. But those are the names you want to go after, primarily on the option side. Highly liquid names. As we get close to the end of the day, premiums disappear. So as we get closer to the end of the day, obviously theta kicks in a little bit faster. You get decay on the contracts. So if you're trading an out-of-the-money contract and it's trading flat, it's going to pull back on you. We want smaller spreads, 10 cents to 5 cents. So obviously the smaller the spread, the better. I, personally, if I can get 5 cents to 1 cent, that's where I want to be. So highly liquid names, 2 points of execution. Primarily 2 points of execution intraday. Pullbacks into support if we're going long, or breakouts, range breaks to the upside. Now, I'm more of a breakout trader, so I like to trade those breakouts, guys. Take starters on the range breaks. So you break a range to the upside, you take a starter of the contracts. So let's look at an example. Let's say I'm playing Zoom like I did today. let's go to the 10-minute chart. So basically, I was looking at Zoom here. Zoom was flagging. So what I did is I took the 150 calls. I knew right away that Zoom had room to the upside into the, let's see where my levels were. On the break of this level towards the 152 area. And then if that level broke the last day's highs. So based off of that, I took a starter on the flag. Once it broke the range to the upside, I added into the position looking for that 152. So I was in the 150s looking for these to get at least 2 points in the money, because that's where I saw the next resistance was on the upside in the short term. You can see the head and shoulders. If you look at the hourly chart, you'll see what I'm looking at as well. Fairly simple trade though. Took it on a breakout flag in this case, added on the range break to the upside, and then I just, I knew where it was going, and then I was selling into that resistance as it got there. Another way to do it, like I said, is you can be grabbing calls into dips or pullbacks. A good example of this would have been yesterday when NVIDIA pulled back. I hate that misprint candle. It pulled back into the 50 EMA, and I grabbed those, I think it was 305 calls, and they were like 88 or 98 cents or whatever, and then it popped back up. They went up like 40 cents. So pulling or grabbing calls into support levels is a good way to grab it. What's a strong support level? The 50 EMA, the 13 EMA, or a daily peak or valley, a daily support or resistance, simply. So for trading intraday, these are the two ways that I want to trade the options. Breakouts are the most simple. Pullbacks are a little bit, you got to kind of get the hang of them. Always take a starter on the pullbacks, and they're more of scalp trades, in my opinion, because you're pretty much going to be in and out. So on the inverted side, so we're looking at long examples. You could short pops into resistance. So you could be looking at rejections at resistance or trends, or you could be taking puts on the breakdowns. Pre-market gappers, first move and secondary move. The secondary move after the morning's done, where you tend to get a reversal in the price, where a good example, I guess, would be this NVIDIA or the shop. So the shop, you got your breakout in the morning, which is the primary move. Then after the primary move is done, you get your trend reversal, secondary move. That's where you want to trade the options with ease intraday. Wait for those setups to actually occur in terms of a trend reversal to happen. Once it happens, then you start to scale in. When does end of the day? 3 p.m. It's 4 p.m. is when the market closes. So I end of the day, last 2 hours, I'd say, I guess. Oh, you're talking about premium decay? Yeah, it starts to kick in at 3 o'clock or 2 o'clock, 2 to 4. That's what I've noticed at least lately. So anyways, secondary area or secondary, wait for trend reversals to occur and then start scaling it. The nice thing about playing intraday on trend or on the second or playing the secondary move after the morning is the secondary move is obvious because it has to break a trend for it to occur. It's not like you're guessing when it's going to occur. The trend literally has to change, and then that's when the secondary move has started. And that's when you take the next position. Intraday idea generation. So we kind of talked about this already, same as before. Highly liquid names, view the market itself, look at the sectors, try to see what's going on in each sector. And based off of that, we can look. The nice thing is when we look at sectors, we're mainly looking at big caps. These are usually liquid names. So we can figure out really quickly, okay, where do we want to be playing options? If you're going to be playing options on the news plays intraday, you want to stay away from them unless you're really fast. Otherwise, we don't tend to get a lot of news plays intraday. I mean, the only ones that I really like to play on the option side is someone's getting bought out or if there's fraud. Sure, you can play that intraday on the option side. Otherwise, I wouldn't touch it. Scanner, heavy option flow one way or the other. So I do use Flow Algo, and it's a good little program. I always say this, and I don't buy or sell based off of sweeps that happen. or big buys or sells that happen on the option side. And the reason is a lot of the times nothing really happens. This is a good idea and a good way to get what the sentiment is in a certain stock to build some sort of thesis intraday. If you start to see it roll over and you see that there's been a lot of puts going through on it lately, you're probably going to have more conviction on it to the downside. So, just a little thing in regards to that. Always play the chart, not the flow, but take note. So you can see my little thing there. Don't follow sweeps, guys. Follow the chart. Note what the sweep is, and then take the trade. If you tried to follow all these trades, I guarantee you it would not work. But if you follow the chart after the sweep has occurred and you use that for conviction, oh yeah, you'll make some money that way. You can't just follow someone doing something blindly without looking at the chart and the chart making sense. That always has to be the case. Intraday idea generation and scanning. So scanning most important. Scanner settings most important. Volume is the most important thing on the option side if you're using a scanner. So this is how I have mine set up. And I do have a option scanner that I have. I actually have it up in the background right now. Let's see if we can pop it up. I use whatchamacallit? Trade Ideas. They're a little option scanner. And this is my settings. Put call ratio, or call to put ratio for the call side, 75%, or put to call ratio if I'm looking at puts, 75%. Option volume on the contract, 75 plus. Volume today, 250% normal. So relative volume 1.5 on the stock. Average volume on the shares, 250,000. 20-day range, 5% minimum. And then you get basically highly liquid contracts, highly liquid names with range that I've been trading on the option side. Good way to do it. You guys can screenshot these settings if you want. If you use Trade Ideas and you want to set up your scanners like I have. Do I really pay attention to those scanners? Not much. I kind of look more at the flow algo. But again, the scanners and flow algo are just used for idea generation. Which one do you like better, flow or Trade Ideas? Flow algo. I find it more useful. Because I can go back and I can look at stuff like when I have, like a lot of the times when I'm out of market hours, or if I'm during the day just scanning through something, I'll go, what did like NVIDIA do today or whatever? And I can look at all the sweeps that I went through it on it today. And it outlines it really nicely. So that's what kind of why I like it. Do I look for volume to confirm on the 10 minutes? GS? Not really. I look for candles to close. That's the confirmation. One thing is this, if a stock is trading really thin, intraday, it's pretty obvious. You want to stay away from that. So options, important to gauge. Volume, is the volume on the option side increasing or decreasing? Typically what happens, guys, when volume increases on the option side, you tend to get follow through and volume or volume spike or price spikes on those contracts. Basically, a sweep will cause a price spike, which makes sense. People follow sweeps. We don't because we're smart. We follow the chart. But if you're in a stock that has a sweep come through, you can sell into those people. Watch options flow out of the money. This can dictate, whether people are anticipating a breakout higher or lower. So that's good. A good indication for, what to be looking at, maybe rolling a contract, etc. Go back, look at recent flow, which we kind of just talked about. This can give you a hint whether or not, the big money is trying to break a stock out to the upside or the downside. Money never lies, guys, in the market. Guys will come on and say one thing and they'll trade another way. Follow the money on the option side. This is what we should need to be using to generate ideas. So it's always a good idea to know where all the cards lie, right? Setups occurred, takes trade, set stops. If you get a range break, take the trade, know where the risk reward is, know what contract to be looking at. Whenever I pick contracts intraday, guys, I always look for a contract that's out of the money, but close to the next resistance point to the upside or the next support to the downside. A contract that could get in the money or close to it. If it's earlier in the week, you can go farther out because the premiums are higher and the contract will hold up. As you get closer to expiration, you want to go closer to the money. Let it work. If a stock intraday, guys, and I can't stress this enough, if a stock intraday is holding a range, or is not holding the range, it's holding a trend, aka it's holding the 13 EMA to the upside, do not exit that contract. Especially if it's earlier in the week. You want to let that thing run as long as possible. Look at the bigger picture. Don't just look at the 10-minute intraday. Look at the hourly. Look at the daily. Is this a breakout? Do you think it has more room? Is this something that you possibly want to hold on to overnight? Never hesitate on the option side. So if you do see a setup occur, guys, and you want to take it. Take a starter on it. Take one contract to start, for goodness sake. You can always add into a position. You don't want to take options late, though. That's the one thing. Move stops as they run. You make 100%, take off 1/2. The option trade becomes free. Move your stops to your entry. No matter what, you're walking away with money. So intraday trading on the option side, guys, just a couple quick notes. Confirmation on the breakouts, breakdowns. Do not fight the trend. Make sure risk reward's in check. Liquidity is key. Not liquid, hard to exit. You're going to have huge spreads. Not something you want to trade. Hourly chart is very useful. You want bigger moves. Make sure that the hourly trend has room, as well as the daily. Hourly trend is what's going to keep you in that trade longer. If you're holding something overnight, use the hourly trend especially. Setups must be present. Risk reward must be good. Confirmation must be done. The trade must be planned if you're trading options. Don't just swing for the fences and buy random stuff, guys. Make sure it fits with your risk reward. So pretty much what I wanted to talk about today, guys. Quite a bit of information. If you guys are new to the webinars, no worries. This is obviously recorded, and there's a lot of other webinars that you can use to gain more insight to certain things like chart patterns or raw technicals and all this stuff. The concept today, intraday trading, looking for setups on the option, the equity side. That's what I wanted to go over, my mindset. There's nothing really complicated overly to what I'm doing. It's pretty specific. The key thing is to have watch lists made so that you can scan through stocks intraday and look for these setups. They'll present themselves. Don't worry about that as you go through. If you set alerts, it speeds the process up, and it also kind of helps you get better and quicker entries, especially if you're trading on the option side. So definitely something to look at, and definitely something to consider doing there. Can you look at AMD really quick? In regards to continuation? Okay, so if we wanted to see continuation on a chart, guys, what do we need to see? We talked about this briefly. We want to see the stock on the hourly close near highs. AMD close near lows on the hourly. It is above the 50 EMA. Let's take a look at the daily. It's probably going to pull back to the 40 EMA again next week. Do I think there's going to be continuation on Monday? No. Every single other day, you can see how, close near the highs, continuation, close near the highs, continuation, close near the highs, continuation. Except for today, it didn't. So, pretty simple concept there. Any other questions, guys, before we wrap it up? When do you change bias and how to change it? Okay, first of all, Nick, you should never have a bias when trading. Only trade the chart. When should you go from long to short, guys? When do you think? People with bias trading will never make money consistently. Because you can't trade off your emotions, guys. That's not going to dictate whether or not something works. Finny, there you go. When the trend changes, that's when you change from long to short. That's it. Keep it simple, guys. That's it. If the uptrend breaks, we should be going short. We should take off our longs. If the downtrend breaks, we should be going long. Take off our shorts. Simple as that. Now, one thing I got to say is this. If you want to be going long or short, it has to depend upon what time frame you're looking to do this on too, right? If you're looking to go long on a swing and you're looking at an intraday trend break, it doesn't matter. It has to be a daily trend. If you're looking to do something intraday, it has to be an intraday trend that you're looking at. This is common sense, you would think, but a lot of people don't do it that way. But a stock gapping up or down, hard to tell the trend. Nope. No, it's not, Nick. Just look at the daily, look at the hourly, zoom out. You can see the trend pretty quickly. The best indicator for a trend is what, guys, on the chart? What's the easiest way to tell whether a trend is going up? Either way, the stock's bullish or bearish that we're using, that I have. Easier than that, Nick. 10-minute 50 EMA. There you go. Exactly. Stock's below it or above it or below it, guys. Below it, bearish. Above it, bullish. There's so many of these little simple things that you just got to remind yourself intraday. If you don't know, am I bearish? Am I bullish? Oh, yeah, we're below EMAs. That's obviously bearish, right? Because the EMAs are the fluid trend. Any other questions? No? Do you usually have more conviction when an option trade is the selected strike has a lot more volume? No. And that doesn't matter to me, Quack. Half the time, we are the volume in the contract. It doesn't matter. It's always about the chart, right? Always, always, always. All right, guys. Any other questions? Or are we going to wrap it up? All right. I'll just shut off the recording here. What webinars do I recommend going back and watching? So here's the list, guys, right here. This is what I say to everyone. I'm going to post this in the education Discord, but go through it that way. For contracts that are out of the money with very large spreads, what do you use for buying? Like ZTS 130 calls. I go in between the spread, try to go as close to the bid as possible, and I work my way up. The 130 calls yesterday got filled at 20 cents, Siri, on ZTS. Oh, limit or market? Limit, of course. Never use market orders on stocks with spreads, guys. You'll get gutted. Because it just tries to get you into the position as fast as possible. It will buy the contracts at the most expensive price. Always use limit. That's why I always say, I never like to use market orders unless it's like an off and unhalt or something like that. Alrighty, guys, that's it. Have a great weekend. Enjoy. Be safe. See you guys next week. If you got any questions, feel free to email me or shoot me a message in Discord. Otherwise, have a good one, guys. See ya.